Hey everyone, welcome back to CryptoCache. Thank you so much for joining me here. I hope you're having a fantastic day. Holy cow, look at this here. Big surprise, Bitcoin's pulling back once more here. So we could see a double bottom forming here, but there's a lot of things we want to talk about the big picture as to why this coin is looking pretty poor. And just real simple understanding that the 67,000 mark, what the price came up to 66,940, that would have been a perfect area to consider shorting. That's what I was looking for this weekend, honestly, and was hoping to wake up this morning and see somewhere between 67 and 68,000, but it didn't even come close to that 67,200 mark. So again, you never quite get what you're looking for here, folks. And sometimes you can kind of go on streaks, as some of my members already know, that sometimes trading isn't always the most favorable. Okay, so again, try not to let it get in your head. Get through this. It's okay. Bitcoin is pulling back, and there's a solid chance it could continue. Okay, so we're going to talk about that. Let's start with this here first. Let's take a look at liquidation and kind of recognize the fact that there is a lot more liquidation to the upside still, but it's much further away. Okay, now generally speaking, when you have liquidation that is that far away, while it can and will be swept at one point, we still need to break that resistance at 67,000 before that occurs, right? So between now and then, we're much closer to that 65K mark, so it would make sense for this 64,000 range to get tested. Okay, so this is the most recent last 7 days of liquidation. These are all longs that are about to get swept. If we take a look though at larger time frames, we can recognize that it isn't sunshine and rainbows. We have a lot of liquidation to the downside even still. So that gap is starting to increase, and we can see as low as about 60,500 is the next area of support for Bitcoin. And also, of course, more important, the amounts of liquidation at those key fib levels, right? 64,000, 62,200. Those are areas we're going to talk about here in a minute. But generally speaking, those are some important things we want to recognize kind of leading into this. All right, so that's kind of where we're at there for the back end. So it doesn't make it's not surprising to see Bitcoin continue to pull back now that we've lost that support. Once again, we were supposed to have a double bottom at 66,300. I talked to my community about that this weekend, and it didn't work out that way, right? We saw a massive aggressive candle wick down to destroy a lot of longs on Friday, and again, we're probably going to see something very similar here. So if it can go wrong, it will go wrong, folks. That is trading for you, okay? So let's take a quick look here at the daily time frame and recognize just a couple of things here, all right? So actually, wait, let's start with the weekly first and work our way down, because again, the weekly candlestick has closed, and we kind of recognize where things are at here on the charts. So again, it's not terrible by any means here, but it's also fairly bearish. So what I mean by that here, first of all, is we're above all moving averages on the weekly. That's still good. This does imply 64,300 should be a good support range for us. Now there is liquidation there. We've already kind of identified on the monthly, but that's roughly very, very close to that same level of support based on that Fibonacci retracement. So if I'm going to consider a long position, that would make be a sensible spot buy for a long position, right? Possibly even a low leverage trade, but again, we got to kind of see where we're at with that. Between now and then, though, what we want to look at as well is stochastic RSI swinging down. The second time essentially carries more weight than the first, so a lot of times when we see the stochastic swing down like this, it can be more aggressive. Again, a lot of that is based on the fact that there's support levels that have been broken and the price is starting to free fall. We can also see money flow index pulling back. Not a good sign, but we are over 50 on the RSI still. So 50 on the RSI and the weekly moving averages there, they're generally letting us know that we're still in decent shape, but there's no doubt that we are still diverging and pulling back. Okay. So me personally, again, this is a rough estimate, very large range, but 60,000 seems to be a very sensible support range for us. We've also got 62,500 and 64,300. Those are some important fib levels based on this most recent extension over the past, since April. That is roughly about let's say month and a half worth of trading. These are where our fib levels are based out of. Okay, so having said all that, we are now on the daily time frame. Let's take a quick look here and see if there's anything helping us understand the situation. Still diverging, still got good momentum there. We've got the MACD and stochastic RSI diverging, not a good sign. We've been under 50 on the RSI for some time now, and again, once you break under 50 on the RSI on the daily, it's generally construed as a bearish sign. Okay, so again, when you take a look at this here, the Fed meeting was supposed to take us above that level. It got rejected there at that 50 range, and more importantly, that neutral news sent the price action down. Doesn't make a ton of sense from a fundamental catalyst, but technically speaking, now that we can kind of see this, it's pretty obvious that we're underneath that resistance level. So it doesn't mean you just short everything. It does imply, though, that with us being under 50 on the RSI on the daily, it's an important factor to recognize that we've broken mostly bearish. And if we do take a look at the moving averages, we can see that's reflected here. All three moving averages are above the price action. We've got the 200-day SMA working its way up at that 56,000 range. So we truly don't have a lot of legs to stand on, but you got to keep in mind we got this larger term support trend line that is still letting us know that we haven't fully broken bearish yet. Okay, even though most things are pretty much telling us so we got a divergence, still very strong divergence here. Let's go ahead and take a quick look at the 4-hour, see what's going on here. We can recognize we're under 50 on the RSI here as well. Stochastic swinging down, money flow index is low. These are all very unfavorable signs. We've just shifted to a MACD divergence here officially on the 4-hour. So pretty much just implies that the price action is more likely to go down than up. Again, the next key level support, 64,300. I may be looking towards a long with tight take profit targets in that range. Yeah, that's again what I'm thinking there. But generally speaking, we can presume this resistance range between 66,300 and 67,200 is that rough estimate of a resistance range now. It was support, now it's resistance. Again, if things would have worked out the way they were supposed to, we would have seen this double bottom take off and the price recover and continue to break this descending trend line. Right now at this point, there's no reason to consider an actual long position right now. I recognize buying the dip here. This is a double bottom too that could possibly play out. There's not a lot of signs here on the larger time frames that we're going to see that turnaround. Now again, when you look for turnaround time frames, the hourly is probably the best one for it. And if we can kind of recognize here, we take a look, first of all, TD sequential, and we quickly peek here, we can see we're massively overextended. Big surprise, massive overextension again to sweep these lower areas of liquidation. So if we see this here, any late long is kind of fairly destroyed. We've got, 6 hours of overextension to the downside. And we take a look at Ichimoku Cloud, we've broken fully bearish. So that overextension doesn't matter too much, honestly. That's just how Bitcoin rolls. And at this point here, we can presume that 66,300 is now a new resistance, because that's right where the cloud's hanging out. Previous support level turned resistance. Hypothetically, if you're going to short, that would be a good case in point there to consider a short position there. Yeah. So again, we could also draw out some smaller time frame trend lines here and kind of see where we're at. We may possibly break above that. If we don't, though, we're going to be in a pretty terrible situation here. So again, me personally, just thinking out loud, I think it's fairly inevitable to see the $64,000 range tested to at least sweep that lower level liquidation, bounce off that fib level, possibly even 62,500, which is this area here as well. So it's no coincidence that we're seeing the price action retrace to those ranges here. Okay, so again, that's just kind of where we're at. Overall, not the worst thing ever. If you do take a look here at our Premium Plus group, at the very least, we are seeing some nice short positions here that my day trading bot is taking. Pretty good results there from Cardano, Litecoin, Matic, Solana, Chainlink, ETH. Pretty much everything's profitable if you're trading to the downside. Now, I was planning to take some shorts here with our premium trades, our swing trades. Unfortunately, this morning didn't really pan out. I was hoping we'd see just a little bit of a pump before the dump, but it just ended up dumping right away. So hey, FOMO happens, folks. Try not to FOMO in. I get it. I understand. And just for the record, too, for those who are watching that are in my community, absolutely making some adjustments here. Your voice has been heard. It's definitely something, at this point, now that we've shifted some momentum, it's important to calibrate and adjust your trading style a little bit. Okay? So we'll be seeing some changes here soon with our swing trades and essentially hoping to get back on track here, which is very much a realistic thing. But again, when you trade, it can be very streaky. And keep in mind, those stop losses that we hit with our swing trades here recently, that mitigated further loss. Most of those coins are way lower than the stop loss right now. So it's important to recognize, keep the stop losses in place. They're there to protect you. And a lot of times moving those down and or just adding to your position can be a very slippery slope. So again, at this point now, when we're kind of shifting momentum from bullish to bearish, it makes sense to protect your investment and to just let those stop losses happen if they do. They actually are your friend. I know it seems weird and it feels kind of odd, but a good trader will take a stop loss in stride and continue to move on. All right. So either way, thank you so much for watching. I hope you learned something today. Have yourself a good rest of your day. If you want to join us over on Twitter, TikTok, Telegram, Discord, we got YouTube and TikTok Shorts now too. It's a lot of fun. So thanks again for everybody who's been able to jump on over there and contribute. Love to hear from you. Thanks again so much for your time. We'll see you in the next one. Have a great rest of your day. Take care.